All right, welcome. I'm here with Yuko Tsuchida from Hito LLC, focusing on primarily tax credits, but tax credits is such a big open bucket. A lot of people don't even know when they qualify for tax credits, what type of tax credits. And I was just shocked at how much money we're talking about here. Tax credits often is a huge chunk of revenue for companies that qualify that most people don't even know they qualify and are leaving hundreds of thousands, if not millions of dollars on the table. And so, Yuko is the CEO. I'd love to just open up the conversations. Tell me a little bit more about what tax credits are, and then we'll dive in specifically because the topic today is talking about Michigan state tax credits available. And so we'll kind of talk about the big programs. Obviously, there's a lot of different options, and it's probably worth a conversation if you're in one of these key sectors and are of size. But let's just start at the top. What are tax credits, and what are the companies that typically qualify for some of these tax credits?
Sure. So tax credit, whenever we are talking about tax credit, it's on a federal side and state side, and in the forms of tax credits, tax grants, tax financing. So there's a lot of different tax credits out there or incentive out there. The type of activity that may qualify is if companies are doing research and development, adding employees, training people, or investing in capital expenditure. Those are activities typically qualify for tax credits. And the industry itself, I will say agnostic, but a lot of large chunk we see is in the manufacturing, high tech. Each state will have different focus, what they're trying to accomplish within the states. Typically, what we see is high growth companies who are creating and adding employees in the states that will typically qualify for credits.
I mean, the things that you described, just about any business of size is doing. I'm hiring people in my state. I'm training my team. I'm investing in R&D or developing that. So what sectors, you're saying high growth, give me some specific sectors. Is it primarily manufacturing, software? Or is it just companies of size, most of them have some sort of tax credit they're going to qualify for?
So the biggest credit we see is in the manufacturing, high tech, including software, SaaS companies, aerospace, manufacturing, hospitality, let's say med tech, medical device, pharma tech, and those type of companies.
And so the state or the federal government is giving you incentives to do certain things like hire employees in our state or to do, it's basically employment credits, right? We want more employees here. We want you bringing jobs to this particular state of the country. And so they're giving you a tax break or a tax refund to do that. Is that correct?
Correct. Yeah. And last couple of years, right? If you think about U.S. economy, they're thinking about hey, we need to bring back semiconductor manufacturing back to U.S. So align with federal to state, if you're bringing back manufacturing plants or specifically in semiconductor industry, there's a lot of grants and credits out there.
And what is a tax credit? The amount that I would have paid for taxes, you just don't have to pay it now. Is that right? Or they're writing you a check back?
Yeah. So a couple of different ways, right? Tax credit could be a reduction, dollar to dollar deduction of your taxes. Second, it could be a refundable tax credit. So if you cannot use those tax credit to offset your income tax or payroll taxes, government will actually give you a check. Other ones are grants. So sometimes you don't have to even use it as tax credits. Those are just fun to use for your growth.
Oh, lovely. Okay. Let's talk about Michigan specifically, because I know you kind of focus down state by state, and each state has their own incentives. You guys have been reaching out to Michigan businesses lately that's in this section. Let's talk about some of the big tax credits, tax grants that are in Michigan. I know that R&D is probably the biggest one. Tell me a little bit more about R&D. What does that look like? How do you qualify? Tell me about how much money we're talking about. What's one of the bigger ones that you've done? How much money are we leaving on the table for not talking about this?
So Michigan, R&D credit, itself, right? This was enacted in 1980s, in federal government, and a lot of states piggyback off of that. Right now, 30 states, provide R&D tax credits. Michigan, they used to have R&D tax credit, but it got sunsetted a couple years ago. And why it's really significant this year is Michigan just passed a tax law to reenact Michigan R&D tax credits. So in addition to federal tax credit, there are going to be opportunity. And what's really cool about Michigan Research and Development Tax Credit is starting 2025, it'll be refundable. So even you are pre-revenue, you are not in a tax profitable way, like, you can get refunded for those tax credits. So it's huge.
Yeah, that's super interesting. How much money is huge? What's huge? If I'm a startup, tech startup, biomed startup, how much money are we talking about?
So any company, small businesses, and they define like less than 250 employees, like, the tax credit for the Michigan portion is 15% of credit, 50% of like, qualified expenses. So let's say like you're spending like $1 million in like wages, 1099 contractor fee and supplies, it could be $150,000 in like tax credits.
That's a big deal. That's a lot
Yeah.
of money. I mean, that's not a huge payroll number to be getting that much back and not paying that in taxes. That can fuel more growth. That's super interesting. What is besides R&D, is there anything more that we should know about R&D, or that qualifies? I'm assuming that qualifies from an R&D perspective. It's not just saying we do R&D. There's a specific program or something that you have to do around that. What does that look like?
Yeah, so the federal government, state, like Michigan itself follows the federal guideline for R&D tax credits, right? So federal government like enacted like 1980s and like really like left it vague, but you have to qualify for like 4 different what's called a 4-part test. So any company who are developing or improving your product or your process, they may qualify, but you have to meet 4-part test. So first test said like, the new components or improving components, that needs to be a part of your business, right? And that's easy. And second one is called like, hard science test. So any development you do to qualify for R&D, like you have to, that needs to rely on like, engineering or science, hard science, we call it, right? So computer science could be one, food science, like anything like, really tangible on that. And then third and fourth goes hand in hand, like development, onset of the development, they have to have an uncertainty and how to systematically uncover or overcome that hurdle. That would be like, fourth test.
Who wouldn't qualify? Marketing agencies?
Marketing agency typically won't qualify. Sales won't qualify. Those are like, called social science, we call it, right? So anything that will be related to soft science, that won't qualify. But if you're actually doing like development using engineering, computer science, hard science, like that would qualify.
Got it. Okay. Anything else we should know about R&D tax credits before we move on? I mean, it feels like for most industries that are in manufacturing, software, anything that's one of those hard sciences that you can actually quantify, there's some big money there that's on the table if you're willing to do the R&D process.
Yeah, last thing is like I will say is like, a lot of pre-revenue or like, tax loss company typically say, oh, we don't qualify or we cannot take advantage of this. Michigan State, like, they allow the refundable credits going forward, right? And then for the federal first 5 year of company inception, if you qualify as a small businesses, you can use that tax credit against payroll taxes, which is like everybody pays.
Right.
So even like, you're not paying taxes, like income taxes, like there might be opportunity there.
And it's always a credit. You're not carrying it forward into future years, or you can carry it forward into future years?
You can. If you cannot like, use a credit, you can carry forward to future years too.
That's amazing. Okay, let's move on to the next opportunity here. So tell me about Skilled Trades Training Fund. What is that?
Okay.
Seems very similar.
Yeah, skill training, like fun, like that's like manufacturing, like who are investing in employee training, they may qualify. So any companies like, this is like not just Michigan, but any states, like you are typically part of your taxes are covering like, training funds. This is to skill up your like employees within the states and your providing like, okay, how to advance your career, how to manage people, those type of like activities may qualify for like, training funds.
So Michigan wants manufacturers specifically that are either expanding or relocating to invest in Michigan employees or Michigan citizens. So they're giving a tax credit for people that are creating jobs or investing in facilities in Michigan. Is that right?
Correct. And this goes to existing manufacturer too.
Okay. So you already are a manufacturer in Michigan and you want to obviously keep hiring people, and this is a training credit essentially. How does this work? How do they apply for it? Is there a certain growth threshold? We hired 50 people? What are
Don't
the,
ask me about details.
so essentially if you're growing a workforce or you're training your existing workforce, you can get some tax credits there, and the tax credits experts that you have on your team are going to figure out if you qualify in that regard. Is it limited just to manufacturers?
I think for the Michigan, yes.
I see. Okay.
Yeah.
I love it. Is this a huge opportunity? Is this a little one? Is this new? Is this old?
This has been like around for a long time.
Okay.
And I wouldn't say this is life-changing training. Grants are like typically not life-changing for companies. However, if you're like, investing a lot of time, right? So we have one company who are doing training grants in California. They're spending about 40 to like 80 hour training per year for each employee. Those are the company like, hey, they want to continue doing training and want to like, maybe invest a little bit more. Those are the clients typically we see for training grants.
I love that. Okay. I'm assuming this is a similar, once the training grant is similar to the Brownfield redevelopment, which is then saying, well, I guess it's not similar. If people are going to clean up or redevelop contaminated sites, if you're a manufacturer, most sites are contaminated or dirty at some point. So they're saying if there's a Brownfield site that you want to move into, they'll give you a tax credit to utilize it and clean it up. Is that right?
Yeah. Yeah. And I think like I believe Sheena is in Michigan, right? Like I heard like, there are so many brownfield development in Michigan. So sounds like, this is a huge opportunity for companies if they can select those locations.
So it's smart, right? Like instead of the state having to have those sit vacant, you have industry come in and clean up the mess from industry, and hopefully it isn't an overwhelming burden, and the state incentivizes that because it gets the land put back to use. What other programs are out there?
I think we can talk about Michigan Business Development Program or Michigan Economic Development Corporation Program. So those are what we call it negotiate tax credit typically. So when you are thinking about hiring or relocating or expanding, those are the time you can go out to Michigan State and say, hey, here is my growth plan. This is what we are thinking about. And Michigan is one of the state we are considering whether you are existing business in Michigan or not, right? And say, hey, here's like, what we are thinking about growth, investment, and like, here is like economic impact if we were to like, bring those like businesses or like employees here in Michigan. And we will like, there's a lot of type of like, credits that gets into like, those negotiate tax credits. And if we can get in front of those investment and be able to negotiate with the state, like, those are like really beneficial for like companies to like, get those funds to like, inject into like your future growth.
So for all of the companies that are leaving California, they can go to the state of Michigan and say, hey, what would you provide if we moved our operations here?
Correct.
And you can have a negotiated conversation.
Yeah.
That's super
And
interesting.
and whenever we do this work, we typically look at like, 2 or 3 different states they're thinking about like moving into, and then we negotiate with like those like, multiple states to get better competition.
So if you want some beautiful lake life and you want to move to Michigan, there's some options there if you're willing to negotiate that through. What states do not negotiate? Do most states negotiate?
Most of the state has like negotiated credits. Some states are statutory driven, so like you cannot really negotiate. Like if you do certain activities, like they will give you certain amount. Texas being like pretty aggressive one, or Florida last couple of years, like they have negotiated like pretty. Their statute is like very loose, so they can like whatever their focus is, they can negotiate tax credit to really attract those companies. They might inject future growth in the states.
And Michigan kind of sits middle of the pack, bottom of the pack, top of the pack. Where does Michigan sit in being flexible or willing to negotiate?
I think Michigan is one of the good states. I will say like Midwest, to south of the country. I will say like they're typically aggressive on attracting like businesses.
Do you have any, maybe whether it's around any of these, R&D or negotiated tax credits, tell us some stories. You can kind of anonymize it or remove some of the names. I'm not sure everybody wants to know what their tax filings are made public, but what are some of the wins that organizations are making? Give us a sample of like the type of organization, revenue or headcount or something along those lines. And then how much money is on the table? How much were they able to win back from taxes? Because who likes paying taxes, right? We'd rather pay our team, pay employees, fuel kind of more of economic growth, and passing that down into our employees is far more beneficial for most business owners than just giving the money to the government.
Yeah, so I'll give you two different like example. First one is like, aerospace company down in Houston. Whenever we started working with them, they were about second year in business and they had like 10 people, 10 employees.
Big,
Over
yeah.
the years, not that big. Over the years, it's been about 3 years we've been working with them, and this year alone, their R&D tax credit on the federal side was about $2 million. For the state side, they're taking like, sales tax exemption on R&D, like, purchases and stuff like that. Over the years, I think we accumulated them about over $5 million in tax credits or exemptions.
Wow.
Yeah. Another one is a little bit bigger. They're about, I want to say 250 million in revenue and about 100 employees in Oregon. They're manufacturing in a semiconductor industry. Over the years, we took over this account from Big Four accounting firm. Whenever your accounting firm was doing the R&D tax credit, their R&D tax credit was about like $200K. After we came in, first year we did like look back study, and they just got the refund check from federal government for like about $750,000, which was missed from one of the Big Four accounting firm. In addition to that, we work with them on Oregon enterprise on tax credits, and which is like about $100K a year for that property tax abatement. And last year we have been negotiating, and this is not final yet, but we have negotiated like CHIP tax credit or grants with federal and Oregon states. If everything approved for future growth and future expansion, they'll be granted for about $32 million. And we are in a actual contract stage.
Holy moly, that's a lot of money. So tell me, why you came from Big Four? You started your own firm that does just this sort of work. I'm assuming that most business owners or CFOs or CEOs or whoever is heading finance or doing some of this stuff tends to put this off, and your accounting firm is not really thinking in this structure. How does that happen? How does a Big Four firm miss millions of dollars sitting on the table like this?
Yeah, I think if we are talking about Big Four, right, we have to remember it's humongous organization and everybody is so overwhelmed. So whenever I was in a Big Four, I was only doing tax prep, and there is a team only does R&D tax credit, and there's a team who only does state tax credit negotiation, and there's the department only does state tax, statutory tax credit. So unless everybody is cohesive and really talking through this, it's hard to keep up with so many clients they have, right? I think looking back, my Big Four era, I had 20, 30 clients, humongous client. I didn't have anything else to think about. So I think that's that. Whenever I think about my clients now, and some of them took a long time for us to onboard, but a lot of time, here, those are only for larger companies. We are not taxable. It doesn't make sense for us, and so there's a lot of notion about tax credit, tax incentives for only profitable company, or this is only for larger company. I think that's the misconception of a lot of CPAs or fractional CFOs.
Yeah, it's super interesting. The misconceptions on whether you qualify or whether this is worth your time is probably the biggest barrier in the way that you're describing it. You don't know that the credit exists. You don't think the credit applies to you. You may be pre-revenue and you think we're not paying that much in taxes anyway. You don't think you get to keep the money, which In Michigan, evidently you do. What other misconceptions? Do we nail them all?
Yeah, I think so.
So it's worth a conversation just to reach out and say, hey, do I qualify for any of this? And it's better to get a clear no as opposed to just assuming you don't, because it is a good chunk of money on the table. Are tariffs or any of that affecting this now, or this is a good way just to combat some of the tariffs impact that people are making?
Yeah, like I think like tariff is like impacting like businesses, but like there's no sudden changes like we are seeing as far as like tax credits or incentive like area. The conversation has been like, okay, like I had like 2 conversations with them like recently, like manufacturing company thinking about maybe bringing back like manufacturing plant to US and how to use that tax credit. But if you think about like manufacturing, like how many like workforce is there, like which state to choose whenever you are building a manufacturing plant, and there's so much complexity around that. So I haven't seen anything like changes in the market yet, but I think the conversations are happening.
Okay, I love it. Well, thank you. For those of you guys that are in Michigan and you need some help and you want that clear, definite, what do I qualify or don't, it's probably worth a 15, 20-minute conversation to at least get an audit or an analysis started to see what you qualify and don't qualify for. But it sounds like if you're a bit, a scaling, rapidly growing organization, that you will qualify for some of this at the very least. And why leave the money on the table and pay it in taxes? No one likes doing that. Thanks for your time, Yuko. We're excited to talk about the next detail of the next state tax credit conversation next.
Thank you, Paul.
Talk to you soon.